Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. On today's show, SEC Peirce says many Memecoins likely fall outside of Regulator's jurisdiction. Goldman Sachs doubles down on Bitcoin ETFs, boosting its holdings to $1.5 billion in Q4 of 2024. Also, Economist Alex Krüger says Bitcoin Supercycle is intact. Expects emergence of Altseason, but there's a catch. And our feature story of today, history suggesting Bitcoin entering next phase of price discovery to new all-time highs. All this and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is February 12th, 2025, and we've got a great show for you today. First thing we want to do is talk a little bit more about financial literacy, and today we are going to talk about your nasty credit cards. So how to pay off these credit cards. Number one, if you have multiple credit cards, what you want to do is pay the one off with the highest interest rate. So if you've got two, for example, or more, pay the minimum payment on the lower interest rate cards, and the one with the higher interest rate, the highest interest rate, pay more on that one. As much as you can, pay these puppies off, because you're literally just giving free money to the banks who definitely don't need more of your money. So some of you are asking, well, all I can afford is to pay the minimum on my cards anyway. So you're going to have to find some money. And everybody can find some money. Whenever I've helped anybody try and find this extra money, every single time we've been able to do it. So how do you do it? You want to list down the things that you spend your money on every day, every month. So out of those things, you're going to have some things that are necessities, some things you have to pay, and you're going to have some things that are optional. I'm not saying you should stop enjoying your life. I'm just saying that within there, you're going to find some things that, you know what, I can live without this. It's not doing much for my life. Why don't I actually pay my card with it? And hopefully within that, you'll find a few $100, and then you can pay a lot more than just the minimum on your highest interest rate card. Pay that puppy off, keep paying it off. Once you're finished paying that off, then of course put the extra money that you're putting on that card, put it on your next credit card, and hopefully before you know it, these things are paid to zero. Once you do pay these things off, your next best decision will be taking that same money that you found, and instead of putting it on your credit cards, now you'll have some extra money that you found. You'll have no credit card payment to make. So that same amount, maybe less a little bit, so you can actually enjoy your life. Start investing that money. And you can jump into yesterday's episode 41, where at the beginning of the show I have some good ideas of where to invest your money. So find that money, and you're going to find it from writing down, not just thinking about it. Write these things down. It's so much better and easier once you write these things on paper, the things, your expenditures in a month, where you can find your savings, and then put that toward the highest interest rate credit card that you've got. Once that's paid, then go to the second highest interest rate, and so on. And once you're done, invest that money. Don't just start spending it, invest it. And trust me, guys, you'll get there. Things are not as bleak as they might seem if you're in all this credit card debt. And for anyone who's young, who doesn't have a credit card or might be thinking about getting one, sure, by all means, you should have one for emergencies. And if you want to improve your credit score, you want to have one. You want to put a very small balance on it every month. I suggest, your Netflix account, $10 or $8 a month or whatever it is. And you pay that down to zero every month. Every single time your credit card gets paid to zero, your credit rating goes up. So it's a great way to improve your score. Conversely, if you hold a balance, your credit score goes down. If you miss a payment, your credit score goes way down. So use it wisely. It's not your money. You get a credit card and think, yay, I have an extra $2,000, $5,000, $10,000, whatever. They'll just keep increasing your limit. Like, they'll give you more and more, $10,000, $20,000. But ultimately, it's not your money. The banks want you to use this. They want to charge you, 18, 20%, 22%, 30%. The department store credit cards charge. So don't do it. Don't get sucked into it. It's not your money. If you can't afford something, well, save up for it slowly until you can afford it, the good old-fashioned way. Let's get into our Market Watch and Bitcoin technical analysis for today. We have a big green candle on a Bitcoin for today, despite the the Feds yesterday saying that they're not going to raise lower rates. We do see a pump on Bitcoin and the entire crypto market. We've got BTC up to 1.5%, 97,500 today. Ethereum up 5%, 2739. Solana up a modest 1%, 196. It was actually down for the most of today. Solana. XRP up 3%, $2.47. Doge up 4% to 26 cents. And we've got SUI up just about 0.5%, $3.61. Our crypto bubbles will give us a better perspective of better look of how the markets were today. And we see 98%, I'll call it, in the green today. We've got Cake up 60%. XCN back pumping again, up 21%. JTO up 16%. BNB coin up 13%. SUI up 10%. Zooming out to the weekly, we've got Hex up 45%. Cake, the big winner, at 117%. Having their cake and eating it too. PLSX up 50%. Ron up 21%. BNB up 25%. Interestingly, for the week, Trump, inverse Trump happening here at 16% down for the week. And if we zoom out to the monthly, we've got XCN has regained some of its losses for the past few weeks. And for the month, it's up 890%. Cake up 37%. PLSX up 64%. Ultima 125%. But most coins we see dumped for the month. Current market cap, we have Bitcoin at $1.93 trillion. Ethereum sitting at the number 2 position at $330 billion. XRP, $142 billion. Solana, $96 billion. Doge, $39 billion. Cardano, $28 billion. And Tron, wrapping up the top 10, $21 billion. The market cap for the entire crypto industry is $3.18 trillion right now, with Bitcoin dominance at 61%. Ethereum at 10.4%, XRP 4.5%, BNB at 3.2%. Currently, we are in a 46, which is in neutral. In our crypto fear and greed index, we had a 47 yesterday at 54 in neutral last week. There are approximately 1,198 days left until the next Bitcoin halving in 2028. That would be 166,504 blocks remaining. And until every Bitcoin's mined in the year 2140, we've got 1,176,575 left to mine. Our total market cap by organization worldwide, we have gold at $19.7 trillion currently. Apple, 3.5 trillion, Nvidia 3.2 trillion, Microsoft 3 trillion, Amazon 2.4, Google 2.2, Bitcoin number 7, sitting steady at 1.9 trillion, silver behind them at 1.842 trillion, Meta at number 9 at 1.83 trillion, Saudi Aramco 1.792 trillion, Broadcom 1.1 trillion, and Tesla now in the number 12 position at 1.082 trillion. And currently you can get Satoshis. This is not calculating correctly for me here. It wants us to buy Satoshis, and we don't want that. Right now, we can get 1,026 Satoshis for one fiat US dollar as we speak. And the US national debt continues to chime upwards, currently at 36,472,612,000,000, equaling 107,185 per U.S. citizen, and that is per debt per taxpayer is 323,046. So we can get right into our stories for today. It's a little bit late, and we've got a new SEC. Peirce says many meme coins will likely fall outside the regulator's jurisdiction. Peirce is spearheading the SEC's newly created crypto task force. The U.S. Securities Exchange Commission likely doesn't have jurisdiction over many of these meme coins flooding the crypto market. SEC Commissioner Hester Peirce said in a Tuesday interview with Bloomberg, "We always have to look at the facts and circumstances, but many of the meme coins are out there, probably do not have a home in the SEC under our current set of regulation," Peirce said. "If that's something Congress wants to address, they can do that. Maybe that's something that the Commodity Futures Trading Commission wants to address, but many of those, I think, are probably not within our jurisdiction." Meme coins, unlike cryptocurrencies like Bitcoin and Ether, have no inherent value. For years, many of the industries have pushed back on regulating them like securities, arguing that they're more like digital beanie babies or baseball cards than investment contracts. Peirce's hands-off stance is a market shift away from SEC's approach to crypto regulation under the former Gensler, who frequently asserted that all crypto tokens aside from Bitcoin were securities. Just one day after Gensler stepped down, acting chair Mark Ueda announced the formation of a new crypto task force spearheaded by Peirce, promising regulatory clarity for the crypto industry and signaling a shift away from the so-called regulation by enforcement practiced by Gensler. Last week, Peirce laid out a roadmap for the crypto task force's top priorities, including resolving the long-standing question on what makes crypto asset a security versus a commodity and creating a more viable path to registration by modifying the SEC's existing paths. In the same statement, Peirce previewed her stance toward Memecoins, writing, "If people want to buy a Memecoin or a product that lacks a clear long-term value proposition, they should feel free, but should not be surprised someday if the price drops. In this country, people generally have the right to make decisions for themselves, but the counterpart to that wonderful American liberty is the equally wonderful American expectation that people must decide for themselves, not look for mama government to tell them what to do or what not to do, nor bail them out when they do something that turns out badly." Yeah, so, honest. Here she is, Hester Peirce, SEC chair, and she's bang on. You want to buy a shitcoin? It's completely up to you. Yeah, you can do it, but I can't guarantee that it's going to be worth anything, and I can't guarantee it's going to, drop to zero. So, it's a reasonable outlook. I always suggest putting, 95, 98% of your money in Bitcoin. And if you want to play a little game with, 2%, 3% of your money, by all means, but be prepared that you might lose it all. Make it so this amount of money that you're putting in these shitcoin speculation, I encourage it, because these might end up being some of the coins that make you the most money because they're the most volatile. You see some that go up 3%, 5%, 30% in just a few days. So not a bad approach, but go into it thinking that I could lose all this money. So never put a lot. A couple percent in there. If you lose it, it's not going to break your bank. 95%, 98% in Bitcoin. The big three. I would recommend Bitcoin due to its finite supply. If you want to diversify a little bit, I would maybe go into XRP a little bit. Again, this is not financial advice, but this is kind of the outlook and approach that I personally take. Now we have some of the big bankers. They also are kind of on board with what I'm talking about. For example, Goldman Sachs doubles down on Bitcoin ETFs, boosting holdings to 1.5 billion in Q4 of 2024. See, they're not putting their money in shitcoins, right? As of December 31st, 2024, Goldman Sachs owns 1.27 billion, or 24.07 million shares of BlackRock's iShares Bitcoin Trust. Goldman Sachs loaded up on two largest spot Bitcoin exchanges traded funds in the final quarter of 2024, according to the investment bank giant's latest 13F filed Tuesday. 13F filings are a way to get a glimpse of how the largest portfolios and some of the most influential money managers play the market. As of December 31st, Goldman Sachs owns 1.27 billion of BlackRock's iShares Bitcoin Trust ETF, IBIT, the largest spot ETF by assets under management. This represents an 88% increase in the amount of shares Goldman owned in the prior quarter. So they basically almost doubled their Bitcoin ETF ownership from the prior quarter. Goldman Sachs also upped its holding of the Fidelity Wise Origin Bitcoin Fund, owning 288 million in FBTC. This is a 105% increase in shares from the previous period. Goldman also reported a smaller Bitcoin ETF position that neither decreased where closed. Each quarter, institutional investment managers with at least 100 million in equity assets under management file 13F reports with the U.S. Securities and Exchange Commission. The filings are required within 45 days of the end of each quarter to provide a view of managers' stock holdings. So here is Goldman Sachs holdings, IBIT, FBTC, GBTC, fair amount in that as well. ARK Invest, iBit. So, secretly, a lot of these bankers are putting their money into Bitcoin, and it appears that if it's over 100 million, they have to disclose where that money actually is, and a lot of the money is in these ETFs. So pretty cool to see that. And what's also cool to see is we've got more bullish news coming in for the Bitty. And we have economist Alex Krüger, who says Bitcoin Supercycle is intact, and he expects emergence of the altcoin season. But there's a catch, so let's read through this. A closely followed economist thinks that the Bitcoin, BTC, and crypto bull market still has room to run on the upside. Damn straight it does. Alex Krüger tells his 205,000 followers on social media X that crypto investors are disappointed because the current cycle appears to be different from the other ones witnessed in the past in terms of time and upside magnitude. But the economist says that the investors should zoom out because he thinks crypto is in the middle of a supercycle. BTC is stuck in a range, which I think eventually resolves higher. The supercycle theory is intact, even though it applies to Bitcoin and crypto as a whole. Market cap, ex-BTC, and stables is considerably higher. Most old alts don't benefit from it on a sustained basis. Should not expect an insane wave of liquidity driving all crap higher for an extended period of time. Be selective. According to Krüger, a supercycle doesn't mean that Bitcoin will keep going higher without witnessing any painful pullbacks. My definition has been playing out. BTC trades in line with equities, but with shorter, smaller drawdowns. Example, 40% rather than 80 to 90%. Looking at Solana, Krüger calls Solana the fastest horse, but he warns that the altcoin is set to see very heavy unlocks in the next few months, meaning that more supply is about to enter circulation. Yeah, so not a good look. As for Ethereum, the trader notes that the largest Layer 1 protocol needs a shot in the arm to ignite bullish momentum, but there's an unlimited supply of Ethereum, right? So how really can it go up? And if it does, won't it then come crashing down with such supply? Ethereum, it can be manipulated just like they manipulate the US dollar. They just print as much as they want. Ethereum, it needs an intervention, increased value capture from layer 2s, plus a few more killer apps running on it. Turning to the broader altcoin market, Krüger says that he expects a new alt season to emerge, but it'll likely not be as explosive as a rally seen in previous years. Expect a new alt season at some point, shorter and smaller than previous ones. Positioning is very negative, and so is his sentiment. But timing is unclear, and the absence of clear catalyst. It can come out of nowhere. Yeah, that's kind of sounds exactly like alts. Again, have most of your money in the big three, and hopefully something comes up with these altcoins. You can have 3-5% in a couple of them, and if you're lucky, something booms and you make a few bucks on that as well. There, of course, is more than Krüger, who's got some bullish news on the history of Bitcoin and the trajectory that we're going through. We have Rect Capital, who is also talking about historical trends. History suggesting a Bitcoin entering next phase of price discovery to new highs, says Rect Capital. Widely followed crypto analyst Rect Capital says Bitcoin is likely undergoing one of its final consolidation phases before making a run to new all-time highs. The synonymous trader tells his 536 followers on X that Bitcoin has already completed its first state of upward price discovery uptrend, and that another bull phase is on its way once support is established. BTC is trying to trend reverse out of its first price discovery correction. History suggests over the next few weeks, Bitcoin should be able to embark on its second price discovery uptrend in new highs. Rex Capital says that Bitcoin needs to begin closing above 97.7 level in order to begin its next move. Bitcoin continues to enjoy price stability at the blue diagonal trend line support, which is a positive. However, BTC needs a daily close above 97.7 and or to reclaim said level as support to build its momentum upwards to 101,000. So we see its current level at 97, so it really needs to get back to 101, and then that will lead it into 106 and then price discovery. But it needs to break through this 97.7. And if we look here, we're sitting on the cusp of 97.7. We'll see what happens tomorrow. Hopefully we can break through and we can sustain it. That number, 97.5, has been talked about for quite some time as the bottom point, and staying above that number is very important. According to the Analyst, the flagship crypto assets bull market should continue for the rest of the year before entering a bear market in 2026, when it could crash up to 80%. 2025 will likely see BTC bull market peak at the beginning end of a brand new bear market, candle 1. The majority of the bear market will take place, however, in 2026, candle 2. The bear market would last some 365 days and be between 65 to 70 to 80% deep. Yeah, so I don't really disagree with this very much. And we see in my own chart here that this is pretty much what happens. It's tricky to see that going way back into, 2012, 2016. But it's pretty easy to see it when you go into the halving of 2020. So we've got the cycle peak at November of 2021. And then we definitely went from, almost 70,000 to the cycle lows, which I believe were around 15. There we go, 18,000. We see the numbers on the right in black, down to as low as 16,000. So if we talk about a 80% correction from the cycle peak, which I'm proposing is between my bear scenario is 220,000, my bull scenario is 380. So if we take 380K and take 80%, right, so then we're talking about it being back down to around the $70,000-$80,000 range, if in fact these end up to be the cycle peaks. And of course, you can look toward those lows, which 100% is your buying opportunity. You're buying the dip. There's two ways to play it. You hodl through all the cycles. That's one approach. And if we look historically, this would have done very well for you if you just hodled throughout all the cycles, the ups and downs. And in the best financial advice, guys, is to in fact hodl through all the ups and downs. It's not day trading. I've said this before and came straight out of Warren Buffett's mouth, and most people are day traders, and they'll buy a security or a crypto and they'll sell it within an hour, or they'll sell it within a couple days. The savvy investor, their time frame is more about 2 or 3 years, and Warren Buffett's timeline, forever. He said it, forever. Like, you hold on through all of this crap, and as you see, eventually everything goes up. So if you look at the S&P 500, for example, and this is why if you're going to go into the traditional financial market, which I do suggest that everybody should be in, I always recommend going with the Vanguard Total Index Fund of the S&P 500. I have no affiliation with these people whatsoever, trust me. But I say to go with that for two reasons. Number one, there's an 8% dividend. Number two, the management expense ratio, MER, is 0.03. And number three, if you simply hodl through all the lows and all the highs, and in fact buy the dip when the market crashes, buy the dip, because you're effectively getting stuff on sale, right? If you hold for many years, 20 years, 30 years, you'll see that it outperforms most things. If you did the same with Bitcoin, if you hodled for, since inception, so we'll call it 12 years, you'd be up, I believe it's 65,000%. Or, sorry, I think it's 65 million percent. It's just an insane number. So, it's not financial advice, but for me, I also expect, like I tell my kid, hodl. That's it. By the time you're, they're young now, if you hold on for it for 20 years, you very well could be a millionaire. So, or a multi-millionaire, or certainly better off than everybody. And as we're seeing, if all the nation states start picking this stuff up, it's going to have to go up. There's going to be this FOMO that's going to start happening, and one country buys it. If the state agrees to create a Bitcoin treasury reserve, every country is going to just jump on it and say, okay, we're creating one too, we're creating one too, we're creating one too, and so on and so on. And what do you think is going to happen? Before you know it, there's going to be zero supply left. Everybody's going to be coming for your Bitcoin. I mean, BlackRock's already coming for your Bitcoin. Make no mistake. Now we've got nation states coming for your Bitcoin. And if they're looking to get Bitcoin and there's no Bitcoin around for them to get, then the price of your Bitcoin is going up, up, up. And, it might get to the point where they'll pay anything for your Bitcoin. So keep that in mind in terms of the hodl game. The other approach, of course, is to follow the trends, follow the ups and downs, so you can effectively, buy the dip in here, sell the high up here, which generally is around, historically, it is around between September to December, the year after the halving. So sell it on the high, wait for the dip, buy the dip, about a year later. Again, hodl until the cycle peak of the next halving and follow that trend. It's tricky. All you can go by is historical trends, and you can either say to yourself, yeah, I'm just going to follow history and whatever happens, or you can simply hodl throughout all these, ups and downs and try to play that game as well. Some really smart people, for example, Michael Saylor, he doesn't care. He's hodling, and he's buying it on the high. He's buying it on the low. He doesn't even care about buying the dip. He just buys it every week. He's dollar cost averaging. Another very, very good approach to buying into Bitcoin, or buying any, even if you went into mutual funds, or the recommendation I gave a few minutes ago about the Vanguard Total Index Fund of the S&P 500, dollar cost average. A little bit every month, a little bit, if you can do it weekly, even better. Bi-weekly, great. Monthly if you have to. But dollar cost average, that way you're assured you're going to get it at the lowest price. You could certainly miss the boat. There's always the fear of missing out. However, it's a very good and conservative way to use your income to invest over the long term. So I highly recommend going that route for 90% of the people out there. Timing the market is a little overrated, and most people lose their shirts by trying to do it. Hopefully you've gained a little bit today and over the episodes in terms of financial literacy and kind of how to save, and a better way to save, and a better way to stop throwing your money into the banks. Please remember that money is abundant and money is everywhere. It's time that's scarce. So whatever little time you've got, use that time wisely. Spend less money than you earn, and that'll also keep you in the green. If you start suddenly making more money, save more money. Don't spend more money, and start saving today. Save when you're 20. You can retire when you're 40, 45, not when you're 65 or 70, when who knows what kind of health you're in by then. And if you've got a great idea, do start that idea today. Don't put it off till tomorrow, because if you keep putting it off, tomorrow will never come and you'll always be living in regret. You're better to start today, fail at it, and you'll be fulfilled. You try again with a better approach and things will slowly come together. But if you don't start, it just gets pushed off and pushed off and pushed off. So start today, guys. Hopefully you found this stream enjoyable. Please, if you have a moment, do subscribe. I'm hoping to have over 500 subscriptions by the end of the year. So please like, comment, subscribe, and we shall see you on the next stream. Thanks so much for joining.